I just found a brand new indicator on TradingView that spots 100% accurate trend lines. It provides easy to follow buy and sell signals with profit targets whenever a trend line gets broken. In this in-depth tutorial, I will teach you how to use this magic indicator correctly, as well as give you a full trading strategy with it that will make you significant profits. Many people would charge hundreds of dollars for such information that I give for free. All I'm asking in return is to like this video and share it with your friends so they can profit too. As usual, I would like to point out that this technical analysis tool can be used for trading highly volatile cryptocurrencies, stocks, futures, and forex pairs. The most suitable time frames for this indicator are 5 and 15 minutes, 1 hour, and 4 hours. Before we begin, I'd like to shout out the most accurate trading signals provider on the market, Easy Options Live Trading. If you're struggling to make consistent profits due to lack of experience, discipline, or patience, this product will solve all your problems. Once you sign up, you'll have access to daily live streams and follow 90% accurate trading signals given by a pro options trader. In addition, you'll learn high win rate strategies with proper money management that will serve you for a lifetime. This is a great investment in yourself as a trader. Join Easy Options Live Trading today and thank me later. To apply this indicator on your chart, log into your TradingView account and open any market. Currently, I am monitoring the Bitcoin price chart on the 15-minute time frame. Open the indicators and search for trendline breakouts with targets. Select this one by Chart Prime. Let's thank the creator of this wonderful script. The trendline breakouts with targets indicator is meticulously crafted to improve trading decision-making by pinpointing trendline breakouts and breakdowns through pivot point analysis. Upon the occurrence of a breakout or breakdown, a signal is diligently assessed against a false signal condition, after which the indicator promptly generates a trading signal. Additionally, it conducts precise calculations to determine potential target levels and then exhibits them graphically on the price chart. These features make this tool stand out from all trendline indicators on TradingView. Let's look at how this indicator works in practice. The indicator draws a downward trend line when the market makes lower highs. As soon as the price bar closes above the trend line, the indicator generates a buy signal with a profit target based on market volatility. If the price reaches the target, the label becomes green. You can choose to follow these targets or set your own. The smartest idea would be to take a partial profit once price reaches the indicator target. Let the rest of the position run until the price triggers a trailing stop loss. When the price makes higher lows, the indicator draws an upper trend line. If the price breaks below this trend line, the indicator gives a sell signal. A recommended target is also displayed on the chart. In the indicator inputs, you can customize the period and trend line length. Changing the period number to a higher value makes the indicator less reactive to price changes. Hence, you'll receive less signals. Extending the lines further can sometimes be quite beneficial. Let me show you what I mean. For example, let's set this number to 50. Now we can use trend lines to get a discounted price when opening a trade. Let's say a downward trend line gets broken and a sell signal is given. Instead of opening a short position here, you now have the option to wait for the market to retest the trend line. If you see the market struggling to break above it, you can initiate a short trade at this price and catch more pips. You can apply the same strategy to long entries too. For example, here the indicator produced a buy signal. This price for opening a long trade isn't bad, however. If you had waited and opened the position at the trendline retest, you would have gotten a slightly better deal. Taking into account a long-term market bias is vital to eliminate fake breakouts. You see, when the market is controlled by bulls, a trendline breakdown is just a short retracement before another significant price increase. As a result, opening a trade at this time is very risky as you bet against the market. There are many ways to eliminate signals like this. For instance, you can install a 200 exponential moving average on the chart. You buy only when the price bar is closed above the EMA and sell when it's below it. This way, you can cancel the majority of fake signals. Another, more advanced way to increase signal accuracy is by adding a good volume indicator. Volume Flow Indicator by Lazy Bear does a very good job at canceling low-quality signals. Before we proceed with the strategy, let's open the indicator style and increase the line's opacity. In the input section, I recommend enabling the smoothing option. The volume flow indicator consists of three components: the volume flow band, the EMA of volume flow, and the middle band, which acts as a baseline. The reason this indicator is so powerful is because it shows buyers and sellers' dominance and can be used for finding divergences. The easiest and most effective way to combine volume flow indicator with the trendline breakouts tool into one strategy is as follows. For a buy trade, look for a trendline breakout first. As we discussed earlier, you can open a trade on a signal or wait for a trendline retest. Volume flow will confirm every signal given by the trendline breakout tool. So, if at the time of the signal, the volume flow line is above the EMA band and they're both positioned above the middle level, the trade is valid. The same rule applies if you decide to open a long position on the trendline retest. For this strategy, place a stop loss at the recent swing low. To determine the take profit price, use the indicator target as a reference point. However, your risk to reward ratio should not be lower than 1:1. As soon as the price reaches your target, close half of the position and move the stop loss to break even. At this point, you have nothing to lose. Apply the opposite rules to short trades. First, look for a trendline breakdown signal. Second, check market volume. It must be negative, meaning the volume flow band is below the EMA, and both bands lie below the middle level. If the volume flow indicator does not confirm a signal, skip the trade. Place the stop loss at the recent high. Apply the same money management rules as for long trades. Traders, I hope you understand this trading strategy. If you have any interesting ideas or better indicators, please write them down in the comments. Be sure to backtest this or any other trading strategy you find on TradeIQ. Once you're satisfied with the backtesting results, be sure to forward test your favorite strategy on a demo account. Only after that can you trade with it on a live account. Thanks for watching. Till next time.